The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and we're hot in the middle of tax season, and we want to help you. So if you have any questions, 803-0930, 803-0930, star 930 on a cell phone. Text us at 716-803-0930. And of course, I'm Esther Gulius, the Tax Lady from EG Tax, with Chris Fabian. Hey, Chris.
Hello, Esther.
And so we have Tiffany skipping school here today. She's just with clients.
Client after client after client.
And so we're really starting to roll out everything. All of our offices are open 9 to 9 Monday through Friday. We're 9 to 9 on Saturdays.
This Saturday and next Saturday.
Next Saturday. So if you're in the middle of getting your things ready for tax season and you have any questions, 803-0930, 803-0930, star 930 on a cell phone. Okay, I want to talk about things that people are missing that I think. I think a lot of people are missing the New York 229. Why don't we talk about that? Who would qualify? So let's say I'm living in Amherst or Cheektowaga or Depew or whatever, and I'm paying $4,000, $5,000 a year in property taxes, and I only got Social Security. Why should I care?
Right. Well, you're going to get $350 back from New York State.
If you file the return.
If you file, yep.
So if you want some money from the state of New York, you need to file the form IT-229, and they are going to give you a property tax rebate. If the taxes you're paying are more than 6% of your income. Well, if you're on Social Security and you have no income, 6% of zero is zero, right?
Right, yes.
So that means that you would qualify.
Yeah, I mean, and the thing is too, unfortunately, the people who live in Buffalo, their taxes are so low, unless you're just on Social Security.
Yeah, right.
You normally don't qualify for people in...
But people in Tonawanda, North Tonawanda, Depew, Cheektowaga, it is true that in the city of Buffalo, taxes are very reasonable. But really, it was meant to give those people in the suburbs who have lower income an opportunity to get a credit. So if you didn't file the New York IT-229, and it's an example of money that you get even though you don't have to file a tax return.
Yep.
But if you don't file it, you don't get it. And so if you missed it for the last 3 years, you'd have like up to $1,050 coming back. To me, that's a lot of money.
Most definitely.
Right?
It could buy a gallon of milk.
Oh, that's not nice, Chris. All right. And then everybody's talking about the change in the child tax credit, the $200 that may be coming down the pike.
But it's $1,800, isn't it? Not $200?
Let's talk about this. So the child tax credit is a partially refundable credit on the federal return, and right now it's $2,000. And if you are a low-income taxpayer, you pay no taxes or very little taxes at all. Once the credit wipes out your tax liability, the rest of it, up to $1,600, as it sits right now, comes back to you as a refund. They're talking about extending it to $1,800, not an additional $1,800. It's $200 more than what it is.
Right.
So a lot of people are sitting around saying, I don't think I'm going to file my return because this might happen. It might happen. I don't know if it'll happen. But if it does, why not get all of your money now and later on get the extra $200 if you qualify?
Right. Because this is, according to the news articles, it's to help all the hungry kids. Well,
yeah, I know.
If this is to help the hungry kids, then parents should be filing to get the money they have coming now to get the food.
Right. Now, the other day I had a family of 5. All the kids were under the age of 17. So this family pays no taxes.
Yep.
Okay? So they get the $1,600 times 5 children coming back to them as a refund.
Right.
if this law passes, I told her she's going to get another $1,000
Yep.
if the law passes. But in the meantime, get your money.
Right. And we don't know. We don't know if it's an automatic. It goes up
Right.
to 18.
I mean,
what the
let's face it,
calculations are.
You would think with computers, when they plug in that money, that they ought to say, "Oh, wait, we're going to send some extra money to
Right.
these people." So we don't know if we're going to have to do amended returns or not. But right now, it's only for those people who have no liability because of other credits. Then the $1,600 per child that would be refundable for kids under the age of 17 would come into play. And if they change the law, you'll get another $200.
Right. And the additional child tax credit is based upon your Social Security you pay in to the system with working.
You had to work.
Right. So we don't know, are they reducing it? Are they just making it 1,800? What the criteria is. They're just giving the big
highlights.
The highlight.
And as
So-
a matter of fact, I think it's kind of, I mean, I hope it gets changed, but,
Yeah.
but you don't want people to sit around thinking it's a lot more money than it is, because it isn't.
Right.
All right. All right, let's go to the phones, and we're going to talk to John in Tonawanda. Hi, John.
Hi, thanks for taking my call.
Yeah.
My question is, I moved back to New York State in March. I'm a resident of New York State, but when I was in Florida, I worked January and February. I made a few $1,000s. I did get a W-2. Do I owe state tax on that? New York
To Florida?
State? No, do I know? Oh, no, there's no state
All right, so
tax in
you,
Florida.
all right, the whole time you were in Florida, you were still a New York resident. Is that correct?
Correct.
Then the money that you earned in Florida is taxable to New York, yes.
Okay, so next
So
year...
when you're doing your federal return, you just do your federal return, and then when you're doing your New York return, everything from the federal flows over to the state, and you're going to pay taxes on that, even though you earned it in Florida.
Okay, so in order to avoid that, when I move there next year, I better become a
Well,
resident
see,
of
it all
Florida.
comes down to intent. If, John, your intent is to become a Florida resident, then you're going to pretty much make it more important, the relationship that you have with Florida than to New York. So you're going to change your driver's license, you're going to change where you vote, you're going to have your permanent residence in Florida. Then if you make money in Florida, it's not taxable to New York State. But if you're saying you were a New York resident, then all income earned everywhere is taxable to New York. However, if it was a state where you had to pay state taxes, then you would have gotten a credit using a New York 112R to get those taxes back. But since there are no taxes in Florida, you're just put it on as income in New York State.
Okay, well, fortunately, it isn't a lot of money because I'll probably end up owing the state. But I appreciate that information, and
Hey,
you have
thank
a
you,
good day.
John. Thank you. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back with your calls and some more tips on the other side.
We are family. I got all my sisters with
Hey,
me.
to us, you are family, and I'm the head mama here. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we have Bob, who's been patiently waiting. Hello, Mr. Bob.
Hi, Esther. You are well worth waiting for. Thank you for taking.
Aw, that is so nice. Thank you.
I would wait an eternity for you. I have a question because, believe me, I would. I have a question because I've listened to you and we've talked before in the past, and I've talked to you about some photographs I've taken, and I've shared them with the public now, and I've gotten quite a response. And my question has to do with the LLCs, where if I took pictures and actually sold them and didn't have an LLC, I would actually be arrested and charged quite a bit of money, especially if I don't file on time. So my question had to do with the value of cost for taking the photographs, which we have talked about. But I would like to argue with the IRS on the actual value of the cost to me. And I'll just give you an example. One of the photographs I have shared, and I've shared it with Channel 2 News, is a photograph of violet light that has actually struck the street. And science actually says that photograph says I should not be able to take it for two very particular reasons. One, that photograph is so powerful with the beam of light that was photographed that science says that UV ray cannot be taken. The other part of it is that the irradiation is so extreme, I shouldn't be here talking to you, which is why there's been quite a stir where I've been showing them. So how do I argue this out with the IRS, and what advice would you give me with an 800
Okay, well, first
number?
of all, Bob, they don't care about that. They only care about your money. Okay?
Well, I
mean,
understand
it's
that.
all about, did you sell them for money?
No. But you got to remember, I also have a government that has no problem leaving $100 billion worth of military.
Yeah, but we're talking about you and me and talking about what's taxable.
I understand.
It's only a problem if you have income. The rest of it may be criminal with the courts and all the laws with the states, but as far as the IRS is concerned, they just want to know what kind of money you got, and was it legally obtained, and what are the expenses to produce the income, and that
That's
has to be
the point.
reported. And you don't, do you really have an LLC?
No, I haven't done anything, Esther. I've
Okay.
just been talking and showing
Yeah,
and
well,
talking.
yeah, I
and-
mean, if there's no money, you don't have to worry.
Right. And to answer your question, the rarity of a photo has nothing to do with the cost of you taking
true.
the photo.
Right.
Thank
your
you.
cost-
That's what I wanted to know.
Okay, good. Now you know.
That now I know, and I'll proceed a different way. Thank
All
you,
right,
Esther.
thanks, Bob.
You are a blessing.
All right. Thank you for waiting. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. Text us at 716-8030930.
I think in
Yes.
that picture he missed you, and you were the radiant
Oh,
glow.
please. Oh, my gosh. Okay. Let's talk about, let's see. All right. Other things that people need to know. If you got an IRS inquiry last year where they wanted to verify your identity and you blew it off, you have to, before they issue those refunds this year, you're going to have to go back to the 2022 return and make it nice with the IRS.
Yeah, I had somebody this week, and they go, I got this letter, and I thought it was fraud, so I didn't do anything with it.
So
and
what
I'm
did you
like,
tell them to do?
I said, well, if you don't want your 22 refund and your 23 refund,
Right.
just keep ignoring it.
Yep.
But you,
I mean, if you get it through the mail, it's, the least you would do is call the IRS directly. Don't blow off these letters that they send you, or else it could ruin your 23 return. And if it happened last year and they've kept your money, that's for 22. And a good way to look at it, when you go to where's my refund, it'll say still processing.
yep.
Okay, because you didn't, they
Yeah,
put
and-
the ball in your court and you didn't lobby it
And
back.
I know with fraud, people are very leery of stuff. I just had this lady who lost her husband in 2023 in the beginning of the year, and coming up to the year anniversary, she kept getting a call from her credit card company, she thought, and it kept calling. She kept ignoring it. She wasn't in the mood to talk to anybody. And finally she answered, and they go, well, we've been trying to reach you. There was fraud. And they listed all her credit cards,
God.
everything. And they're like, well, we can help you. You just have to reopen these cards. And she's like, but that's my husband's card. And they're like, well, we don't care. You have to reopen it. Give me his,
Oh, it was all fraud.
it was all
con.
fraud. So she luckily caught it in time.
I wish
but-
these people go get a job.
Yeah, or
instead of
use their
being-
power for good.
Right. Okay, another thing that, again, 8030930, 8030930, star 930 on a cell phone. Knowing how to use the energy credits, which are very powerful credits. Credits are money in your pocket. You can save $1,200 per year if you use your energy credits wisely. Now, that would mean like if you need windows and you say it's $20,000 for new windows, well, the credit's only going to be limited to $1,200. So So if you did $20,000 in windows, which is a $6,000 credit, you're not going to get it. You're only going to get $1,200. So you want to spread out those windows or spread out your projects over a number of years, because you can get up to $1,200 per year on as credits if you wisely do your credits.
Right.
Right?
Yep.
And another thing I want to talk about is don't ignore itemizing on the New York return. All the things that you can't deduct on the federal, you can deduct on New York State. So if you're somebody that has, maybe you're limited by the SALT, state and local income tax, and the and your mortgage interest and your charities, and you don't have enough to make the standard deduction on the federal, you probably can on New York State. And it's a lot of money.
Right. Especially if you're single.
Right.
You can get, if you're a homeowner now, in the last year, the interest rates have gone up through the roof. You're paying a lot of interest
And
now on new homes.
Right.
So,
And they do have a bill pending in Congress that is talking about doubling the SALT deduction because of the marriage penalty. And that's what we're going to talk about later on, is that it actually costs you money to be married versus being two single people. And all the single guys raised their eyebrows and looked at their girlfriends and said, I told you we shouldn't get married. But I'm going to tell you the truth. If you're two singles, you probably make out better than being a married couple filing a joint return. Okay, let's go to Tom in West Seneca. Hello, Mr. Tom. Thanks for waiting.
Hi, how you doing?
I'm good.
Hey, I had two questions for you. One pertained to the ITT 229.
Yeah.
I'm retired, and my pension is roughly $69,000, and my taxes are roughly about $5,700. I'm only 53 years of age, and I wondered if I qualified for that.
No, you don't. You make too much money.
Okay, and the other question.
That was my whole thing, though, Tom. There are people
Yeah, I
sitting
kinda
out there that
didn't
haven't
know
wanted
any
to
of it.
file a tax return for years, but
Yeah.
and they have no income, and they're paying property taxes of $5,000, and they should do the 229.
I just caught the tail end of that. My other question was, since the first of the year, I wanted some added income, and I started driving an Uber to make some money. What forms am I going to need next year, and what do I need to keep track of? The mileage and...
Well, one thing about Ubers, they're
Yes.
really great about that, right? Don't you think, Chris?
right. You're going to get a 1099 and a report from them to show you your total money plus your miles. But you're going to want to keep track of your cell phone, your interior cleanings, any extra cost you have.
Any tolls? I
Yep.
think that Uber
Tolls,
even
we'll do tolls.
Yeah,
What
but
about like gas and stuff? Should I keep track of the gas receipts?
No, because the mileage will be way better. But with the mileage, you want to keep track of when you leave your home to go pick somebody up, and on your last going home or going from your last ride to back home, because those miles count. Uber and Lyft doesn't count those miles.
they don't know.
Because they don't
Yeah.
know.
Okay, so I should keep track of basically all the miles I do in
Yeah.
one day when I'm Ubering.
Yep.
Yeah.
Yep. You should
That
you
would
leave
be
your
good.
home and say starting 10,223,
Right.
coming back 10,438.
Mm-hmm.
So then you subtract it and you know what your business miles were.
Right, and then you can either do actual or standard mileage rate, but really the standard mileage rate is tough to beat.
Okay. And that pertains to just when the Uber's on, say like I take somebody to a destination, I turn the Uber off, but then I go back to the airport and start over again. Do the miles?
But all those mileage, you're turning it off, but you should still keep track of that mileage, because that's still, you still get 65.5 cents a mile for that.
Okay. Should I actually keep like a logbook, or is it
That
all
would
right
be
if
good.
I
And
just,
we have logbooks at our offices. You can stop in and pick one up.
Okay. Hey, thank you very much for your time.
All right, Tom.
You
All
know,
right.
I didn't want to tell him too, but he may be considered a W-2 employee very soon.
That's right, because right now there's a reclassification by the Department of Labor for people like Uber and Lyft drivers and Instacart drivers, and they want to reclassify them for for employees. But so far it hasn't happened. March 11th, that's a big change, March the 11th. Right?
Yep. We got a fast text before the news.
Yep, we do.
I heard volunteer firefighters get some sort of tax incentive for being a volunteer. Is this accurate? What is it?
It is. It's accurate. There's a firefighter's credit on the state of New York if you volunteer for one of the fire units and you're a volunteer firefighter or EMT person, and it's $200 per person.
Right. And not to
And
mention,
it's refundable.
yep, that's refundable. But if you're also older person who's been in the volunteer firefighter company, you may be getting your LoSAP payments,
Yep, that's
which is also tax-free on New York State.
Right.
So there's, on New York State's,
So, okay, but explain what a LoSAP payment is, Chris.
it's basically a retirement check for being a
Okay,
volunteer
very good.
firefighter.
Okay, great. All right, I'm Esther Gilius, the tax lady from EG Tax. All of our offices are open to serve you 9 to 9, Monday through Friday, 9 to 5 on Saturday. We're closed on Sunday except for the McKinley Mall, right?
Yep.
And we're going to take a short break for the news. We'll be back with Pat and Ron and your calls after the break. Thank you. This is
We are family. I got all my sisters with me.
Hey, to us, your family. I'm Esther Gilius, the tax lady from EG Tax, and if you need the best tax help for the most reasonable fees, we think you should give us a try. We have 32 area offices to serve you. We are on the web at egtax.com if you want to know where all of our offices are and their phone numbers, and the pictures of the offices are even there, right?
Correct.
All right. And so we're answering your tax questions, 8030930, 8030930, star 930 on a cell phone. And we have a couple texts, but I'm going to go to Pat in Amherst. Hi, Pat. How can I help you?
Hi, Esther. Thank you for taking my call. I'm a widow this year, well, actually from last year, and I just want to know, because this will be the first time I'm filing single, and
Well, no. What year did your spouse pass away?
22.
In 22?
Yeah, and that was,
Okay.
I filed joint because he lived
Yeah.
till May of
Okay.
22.
I thought maybe he passed away in 23.
No. And so what I wanted to know was the standard deduction. I never seem to have enough to itemize, and I don't think I do this year, but is there a separate one for New York State than federal?
All right. Yes, the New York State itemized deduction is lower than the federal. The federal itemized deduction for a single taxpayer is $13,850. And if you're over the age of 65, there's an additional
1700, 17.
$1,750, I think.
Yeah.
Yeah. So, that would be your threshold. It'll be around $16,000 in order to itemize. Do you have large?
And New York is 8,000.
Right. And so if your expenses on a Schedule A exceed 8,000, you would do better itemizing on New York State.
I see. So what does it include? Medical and what else?
So your medical, are you paying large medical bills?
Co-pays mostly, and then the premiums.
Okay, so you have your Medicare, your co-pays, your doctors, dentists, glasses, trusses, braces, crutches, co-pays, ambulance goes into medical, then property taxes for your property taxes, mortgage interest, charity, and if that all comes up over at 8,000, you'll list that as an itemized deduction on the state. And are there any? Did you pay any investment advisor?
No.
Because that would be another itemized deduction on New York State. And you don't use your car in your job. You're not working, correct?
Correct. And I have 2 annuities, so I wait for the 1099 from that.
1099Rs, right?
Yeah. But I didn't know if I, should bother doing my medical but for 8,000 for New York, I could try and see what I have. I just didn't want to get it together if it wasn't going to work for anything.
Right. Unfortunately, you never know till you try.
Right.
Right.
And
You're not a casino goer, are you?
No, not anymore.
And that's good. If you're a senior and you're a casino goer, then your gambling winnings are taxable online on page 1 And then the deduction you have to take as an itemized deduction, and many times it makes you pay 85% of your Social Security, and it can be a big problem.
Oh, no. Years ago when I used to take my dad, then I would go, but I haven't gone in years.
Well, then you're winning.
That's true. That's true, Pat. Any money that stays in your pocket. Hey, thanks for calling, and I'm sorry to hear about your spouse.
Oh, thank you very much. And I do go
All
to
right.
your office every year on
Well,
Sheridan.
we'll take good care of you. Okay?
Helen always does. Thank you.
Oh, very
right.
nice.
Oh,
Helen's a
sure.
wonderful lady.
Yeah. I'm Esther Golias, the tax lady from EG Tax. We have a couple texts here. Right?
We do. It says, Esther, 1099-R distribution form from my investment company never arrived, but the company said they mailed it out in middle of January. They did send me a new one, but what happens to the one that was lost in the mail?
Okay, so back in the day, there used to be telephone books, right? And you want to look up a phone number, you'd open up the telephone book, it would say the name and the address, right?
Right.
If somebody picked up your 1099-R, all they're going to have is your name and address. The Social Security number is truncated, so only the last 4 digits are showing. So they're not going to get that kind of incriminating information, and they will know how much your pension was. That's it.
Right, right. And if they go to use it, hopefully it didn't have any withholding and it screws them on their tax return.
Right, but if it wasn't paid for them,
Right,
they're not going to
right.
get it anyway.
Yep, yep.
Okay.
And
then what else we got?
the next one says, is there a tax credit for upgrading your circuit breaker electrical panel from, say, 100 amp service to 200 amp service? If there is, how much is it? Thank you in advance.
So that would be on one of those clean energy things if the upgrade was for
Clean energy improvements. Yep.
So
High
then-
energy furnace, all that stuff.
Right.
Then you can use the panel, and I believe it's a 30% cost
Right.
up to $1,200.
Right. All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I wanted to talk about how there is a big marriage penalty throughout tax law. And I wanted to give an example. So assume that a tax, I'll do this one. So assuming that there's a couple that would be living together, husband and wife, with income of $50,000 apiece, have 2 kids under the age of 17, and stock losses of $3,000. If they file jointly, okay, their taxable income using the standard deduction would be $3,879 because they get the $4,000 child tax credit for the 2 kids. But if they were single, one of them would be head of the household, and they would have taxable income of $26,200, and their taxes would be $2,833, but they'd get an earned income credit, right?
Yep.
For the children of $1,241 and a child tax credit of $4,000. So they wouldn't pay taxes at all. They'd get a refund of $1,608. The other partner would have taxable income of $33,150, and the taxes would be $3,761. So they save $1,726 if they were single versus married.
Goes against everything mommy taught me.
That's true. That's true. So that's just one example. I know all you guys are saying to your girlfriends, see, I told you we shouldn't get married. All right, but let's go back to the phones. We'll talk to Francis. Hi, Francis. How can we help you?
Hi, my mother is a widow, and I am on her banking accounts just for in case if anything happens, I have access. But she earned a few $1,000s in interest, and we got the statement that my name's on it too, even though it's hers. How do I handle that? Am I,
Whose social security number is it in, friend?
I'm sorry, can you repeat that?
Whose social security number is on the 1099-R? I mean 1099.
That's a good, hers for sure. I didn't check to see if mine's on it. I would think the bank would have wanted mine when we added
Nope.
my name.
Nope.
Okay.
The bank would only do the primary holder. So if her number's on it, they're going to be tracking her.
All right, so I'm just I don't know what the word is, but so that doesn't affect
Paranoid.
Paranoid. There you go. Yeah, well, I don't want to pay for more if it's not mine. All right. Right.
Yeah, so
well, I mean, if
check
they have
check to
taxes, I want
see.
half the interest.
So check to see whose social security number is on there. In the event
Okay.
yours is on there, you can do a nominee distribution back to mom.
Okay, thank you.
You're welcome. Thanks, friend. Okay, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Let's go to Betsy. Hey, Betsy. Heaven to Betsy.
Hi, how you doing? Thanks for taking my call.
Yes.
I have my daughter went away to college this past fall, and we took out some money from her 529. She's a beneficiary. I'm the account holder. So I have there's two accounts I have for the 529. One of them I got two 1099 Qs. So one of them was paid directly to the school. I had the money sent directly to the school, and they have the recipient's TIN as my daughter. And on the other one, I just had it sent to my bank account and paid the school directly from me. And so then they have the recipient's TIN as me.
You.
In any case, the money was spent on her tuition. So do I need to do anything with these?
Well, there's a couple different things. On the federal, there's the education credit and the earnings, because they're on those 1099s, there'll be an earning box. You have to allocate what percentage the earnings is from the total distribution, and then you back that away from the tuition. So your college credit may be limited on the federal because of the earnings from that, but that's it on the federal. On New York State, you have to record the distribution, but it was used for education, so really it won't be income at all on New York. So you're not going to pay any tax on it. It's just it may impact your federal college credit, and you won't get the New York credit because none of it was ever taxed to begin with in New York.
Okay, so it all is going to be on my federal, not on, because she also.
Well, see, that's the way the
federal return.
Betsy. So this is her first year in college.
Yes.
So you're going to qualify for the American Opportunity Tax Credit, assuming that not all of her tuition fees and books were covered under the 529. Was there anything else hanging out there that wasn't covered by the 529?
Oh, yeah, we had to take out a loan. Yeah.
I mean, not for housing. I'm talking strictly for education.
Oh, yes, strictly for education. She was at a private school, so we took out $8,000 from her 529, and then the rest was paid just by our own cash. And
so you're going to do you'll get the full American Opportunity Tax Credit on the federal. On the state of New York, if there was still $10,000 that wasn't covered, you're going to get the full credit for the Empire State education credit on the state as well. But what Chris is saying is you're limited. Like, let's say, for instance, that you took out $8,000 and her tuition was $8,000. Well, then on New York you would have gotten no education credit. On the federal, if the tax-free dividends were, let's say, $1,000, then you would have had to reduce the amount of education by $1,000, but you're limited to $4,000 on the federal anyway, so you would have gotten a full credit there. But in your situation, you get a full credit. It sounds like, I don't have
Without
the things
looking
in
at
front.
everything.
Yeah, without looking at it, but it looks like a full credit AOTC on the federal and Empire State College credit on the state.
Okay, great. And you said, and again, that's all on my federal return.
That's
now.
on yours, not on hers, right?
Okay. All right. Thank you so much. I really appreciate your help.
Thank you, Betsy. All right, I'm Esther Gilius, the tax lady. We're going to take a short break. 8030930, 8030930, star 930 on a cell phone. Talk to you on the other side. Hey, I'm Esther Gilius, the tax lady from EG Tax. Our phone number is 8030930, 8030930, star 930 on a cell phone. We got a bunch of texts here, but I wanted to point out some other disparate disparaging things in tax law where you are better off having two singles living together than married filing a joint return. The $3,000 stock loss, capital loss, is limited. That's the amount per couple. If they were two singles, they'd both get $3,000.
Right.
Right? The rental loss, if you were married filing a joint return, the maximum you could take is $25,000. If you were two singles, $25,000 apiece.
Right. Right. Yep.
EIC limit. If you both had a kid and you're splitting the income, you both could get an earned income credit, whereas the income together you wouldn't qualify, and that's a big one. Limited daycare credit, because
Yeah, it caps out at
Right.
20%.
right. Limited energy credits. Limited student loan interest deduction, $2,500 versus $1,2,500. Limited itemized deduction versus standard, right?
Right. Yep.
And then the $10,000 SALT deduction.
Right. Right.
That
The-
it would be if you had two singles living together, it'd be
20,000.
20,000 versus 10. I mean, it goes through. This is just some highlights, right? But anyway, lowlights. Highlights.
Really fast.
Right. Okay, let's go to what do we got here?
We got
Tax.
Esther. I have about 100,000 after tax balance in my 401k. How do I convert it into a Roth? I understand I would have to convert any earnings on that amount also. And since I'm getting my health insurance on the exchange, will any conversion affect my insurance premium? Thank you. So the bad news first is, yes, it would impact your health insurance. So if you're getting a subsidy, you would end up paying back all of your subsidy probably.
I mean, I don't know whether you know it, but when you move from a traditional to a Roth, it's fully taxable. So if you're in the 30% tax bracket, looking federal and state, you're going to pay $30,000 in taxes to do the conversion.
Yeah, so I mean,
it's a very serious conversation you should have with yourself and your broker, if it's your broker, because in order to move from a traditional to a Roth, you pay the taxes now, so that when maybe someday you would actually distribute that money with the standard deductions, and they could be $40,000 or $50,000. You're giving up the deduction. You're paying the taxes now on something you may never pay taxes on later. So really consider this soberly.
right, you should really come in during the summer when we have time and we could sit down and talk about.
And work it all over.
Yep.
You know, because a lot of times all people know is like, got a Roth, it's going to be tax free, it's going to be tax free. And then you say, do you have a government pension? No. Who's going to be funding your pension? I am. Do you think you're going to put like $3 or $4 million away? No. Maybe I'll have $400,000 or $500,000. You spread that over 30 years when you're taking it out. That's very little. If you would live to be 80 or 90 years old, right?
Right. Yep.
So
Yep.
it's really a crapshoot, and sometimes media hypes things, and if you don't know tax law, you can really make a bad decision.
I mean, I know last week I had somebody had $19,000 in her traditional IRA, and the broker's like, we got to put you in a Roth. We got to put you in a Roth. We got to put you in a Roth. It's tax free.
$19,000.
And
That's all she had.
And I said to her, so have you ever, because she was up there in age, have you ever worked for the federal government or the state or local? No, nope, never. I said, do you have any other retirement income besides this? Nope. I said, then don't convert.
Right.
And she goes,
Because
why?
because it's not that you're against Roths,
Right.
But the bottom line is, in her situation, she'll never pay taxes on
Yep.
this. So why would she pay taxes on a conversion?
Yep.
Right. Okay, and then
Another
I
text.
had a thought, but it's gone. All right, go on.
Okay. It says, hello, my husband will be 65 this April. He's working and under my health insurance plan, high deductible. If he switches from my plan to Medicare, will the monthly Medicare premiums be pre-tax as my EE plus one premiums are now, or will we lose that benefit of reduced earnings if he switches to Medicare.
Well, if he goes to Medicare,
It is taxable.
It's taxable.
Yep. And then if you itemize, you would be able to use the Medicare as part of your medical.
Right.
But yeah, so the pre-plan or the pre-tax dollars that you're paying now would go away. So,
Right, but here's the thing. If he's turning 66, 65, he has to go on Medicare unless
he goes on Part A. He can turn
Right.
down Part B, the expensive Medicare,
Right.
and still be off of his wife. So he could wait till when she retires
Okay,
to
so
be
she's talking about
switching him
Okay,
totally
totally.
to health. Yes,
Okay.
yes.
And then what else we got here? Or is
That's
that
it.
all the same?
Oh wait, it's after tax. Oh, it's been taxed already. Oh yeah, it's more of the same.
Okay, good
So
enough. Anyway, all right, so some income that hasn't been taxed that maybe people don't know about is debt cancellation. Debt cancellation, when you call the MasterCard Visa company and you say, I can't pay you, and they say, well, we're going to forgive the debt, that's potentially taxable, correct?
correct.
However, if at the time of the forgiveness of debt you are insolvent, then you can do a Form 983.
982.
982, and you would be able to back off that potentially taxable debt cancellation.
Right, right.
But
Yep.
you have to be insolvent.
Yes.
Okay, we got Ron just coming in.
Yep. Let's go to Ron
Hi,
and
Ron,
M.
how can we help you, sir?
Hi, just real quick. Happy Sunday.
Hello, Ron.
Saturday. Are you there?
Ron?
Hello?
Well, I'll just keep going. Expense reimbursements on an accountable plan. If you are somebody that's an outside salesperson, for instance, and you're driving around and your employer is not reimbursing you, he just gives you $200 a week to drive around, for instance, and that's not on an accountable plan, that ends up being taxable income. So you got to go on an accountable plan and ask for the reimbursement so it's not taxable.
Right, right. You know, but go with that. There's no 2106 anymore to report the.
Right, but there is on the state of New York.
Right, right.
There is but the thing is, if it's a non-accountable plan, it's still taxable.
Yep.
Right? Okay. Oh, we got Ron. We got Ron back again. Hi, Ron.
Hi, guys.
Maybe
Happy
we don't
Sunday,
have Ron.
Saturday. What's
Okay.
going on?
All right. Other income that isn't taxed. Gifts. People ask me all the time, if I give a gift to my children, is that taxable to me, deductible to me? How does that work, Chris?
Yeah, gifts are tax free and they're not deductible
Right.
because they're tax free.
Right. But if you give more than $18,000,
Then you have to file a gift,
gift tax
tax return, but it doesn't mean there's a tax.
right,
It's a bookkeeping form. They should just call it a gift return.
right, whatever. But
Yep.
but obviously to keep track of the gifts that you've given over 18,000 if you have a gigantic estate.
Right. And we got another text that said, I had my student loans forgiven this year by the government. Do I need to pay taxes on what was forgiven?
They should be sending you a debt cancellation form if it was for, it's very hard to get it forgiven, so there must be a reason.
Right. Well, I just had this happen, and believe it or not, it is tax-free on the federal. New York State was looking to tax people on it, but they're now going into the assumption that it's tax-free as well. They haven't decided to tax people on it yet.
All right, that's cool.
So you got to see if you are getting that 1098-C.
All right, life insurance proceeds due to death is tax-free, right? Life
Yep.
insurance proceeds. Workers' comp is tax-free. Personal injury awards is tax-free. A lot of people are unaware of that. Annuities paid by the government plan survivors of public safety officers are tax-free. Public welfare benefits are tax-free. People don't even know that their health insurance provided by their employer is tax-free. And it's remarkable when you look under box 12, under DD, when you take a look at how much they're paying collectively for health insurance, you think, wow, and it's tax-free.
Yeah. Yeah. That benefit is unbelievable. And I know, Ron, we're having phone problems. Why don't you give our office a call at 632-7886?
You can talk to us.
And we'll talk live.
All right, VA benefits are tax-free. And some Social Security benefits are tax-free, provided your income is low enough, taxable income is low enough, but it can be up to 85% taxable. And that's why if you're somebody collecting Social Security, you want to make sure that you don't end up getting income that's taxable, such as gambling, that would make your Social Security more taxable.
Yep.
Right? Okay, so any things you want to say, Chris?
Just, get organized. That's the most important thing when you do your taxes is be organized. Make sure you have everything. Look to make sure you have all your W-2s, all your interest, your mortgage statement.
And don't forget that extra $200 that they're talking about with the child tax credit has not been passed yet. So if you're somebody that needs the money, don't wait for this. I'm thinking it's going to happen, but don't wait for it. Get your return filed.
Yep.
And if you need us, we're at egtax.com. Thanks for listening. I'm Esther Gillies, the Tax Lady. See you next week.